Question 1. Which of the following is a characteristic of an insurance policy's insuring agreement? A. It outlines the duties of the insured in case of a loss. B. It describes the insurance company's promise to pay for covered losses. C. It states the policyholder's right to cancel the policy at any time. D. It specifies the exclusions from the policy's coverage. Answer. B. It describes the insurance company's promise to pay for covered losses. Explanation. The insuring agreement is a critical part of the insurance contract that specifically describes the insurer's obligation to pay for certain losses as stipulated by the policy. This section outlines the type of coverage provided and the circumstances under which the insurer will make payment. Option is incorrect because the duties of the insured in case of loss are typically described in the conditions section, not the insuring agreement. Option C is incorrect because the right to cancel the policy would be part of the cancellation provision in the contract. Option D is incorrect as exclusions are outlined in separate section of the policy, not within the insuring agreement. Question 2. Mr. Davis has been paying his life insurance premiums regularly for 5 years. Due to unforeseen financial hardship, he misses his premium payment for the first time. According to the terms of his policy, Mr. Davis has a 31-day period to pay the overdue premium before the policy lapses. Which of the following statements best describes the situation? A. Mr. Davis' life insurance policy will automatically be reinstated after 31 days if he pays the overdue premium. B. Mr. Davis can reinstate his policy during the 31-day grace period without proof of insurability. C. The policy will lapse after 31 days and Mr. Davis will lose all coverage permanently. D. Mr. Davis must submit proof of insurability to reinstate his policy after the grace period. Answer. B. Mr. Davis can reinstate his policy during the 31-day grace period without proof of insurability. Explanation. A grace period allows the policyholder extra time to pay overdue premiums without losing coverage. According to Texas insurance law for life insurance policies, if the insured misses a premium, they typically have a 31-day grace period to make the payment without the policy lapsing. If the payment is made within this period, the policy remains in force without requiring proof of insurability. Option is incorrect because the policy will not automatically reinstate. The insured must make the payment within the grace period. Option C is incorrect as the policy will not lapse immediately. The grace period allows continued coverage. Option D is incorrect as no proof of insurability is required within the grace period. Question 3. Scenario question. Sarah is a licensed insurance agent in Texas. She recently received a referral from a friend who is seeking a new health insurance policy. Sarah is aware that her friend has a pre-existing medical condition that could significantly affect their eligibility for coverage under certain policies. Sarah knows that some insurers have exclusions related to pre-existing conditions. What should Sarah do in this situation to ensure compliance with ethical and legal standards? A. Sarah should inform her friend about all available insurance options, including policies that may exclude coverage for pre-existing conditions. B. Sarah should only recommend policies that explicitly cover pre-existing conditions, as she cannot suggest any that may exclude them. C. Sarah should refer her friend to an insurance company that she knows will not ask about medical history. D. Sarah should inform her friend that they cannot be covered under any circumstances due to their pre-existing condition. Answer A. Sarah should inform her friend about all available insurance options, including policies that may exclude coverage for pre-existing conditions. Explanation. In Texas, as well as under the Federal Affordable Care Act, agents must ensure that clients are fully informed about their options and the terms of the insurance policies being considered. The agent's duty is to disclose relevant details about policy exclusions, including those related to pre-existing conditions. While Sarah must ensure that her friend is aware of the exclusions, she is not obligated to recommend policies that explicitly cover such conditions if they are unavailable. Option B is incorrect because Sarah is not required to exclusively recommend policies that cover pre-existing conditions, but must still disclose options. Option C is incorrect because recommending policy that avoids asking about medical history would be unethical and possibly violate the law. Option D is incorrect because it is not within Sarah's responsibility to outright declare that the friend cannot be covered. Rather, she must explore available options. Question 4. Which of the following best describes the risk-pooling concept in insurance? A. It involves a group of insured individuals contributing premiums to create a fund that covers shared losses. B. It refers to the process of selecting risks based on their likelihood of incurring a loss. C. It allows insurers to transfer the risks of policyholders to another insurance company. D. It is a method used by insurers to determine the rates of premium based on risk levels. Answer A. It involves a group of insured individuals contributing premiums to create a fund that covers shared losses. Explanation. Risk pooling is a fundamental principle of insurance where a large group of policyholders contribute to a common pool of funds. This fund is then used to pay for the losses experienced by any member of the group. The idea is that not all individuals will experience a loss at the same time, so the premiums paid by many help cover the losses of a few. Option B is incorrect because risk selection refers to choosing risks for coverage based on their likelihood of loss, which is part of underwriting. Option C is incorrect because transferring risk between companies is called reinsurance, not risk pooling. Option D is incorrect because the process of determining premiums is based on underwriting and classification, not risk pooling. Question 5. Which of the following is true about an insurance agent's fiduciary responsibility in Texas? A. The agent must always prioritize their own financial interests when selling a policy. B. The agent must ensure that all premiums paid by clients are sent to the insurance company on time. C. The agent can receive commissions from both the client and the insurance company without disclosure. D. The agent has no responsibility to ensure the client's best interests when recommending a policy. Answer B. The agent must ensure that all premiums paid by clients are sent to the insurance company on time. Explanation. The fiduciary responsibility of an insurance agent refers to the agent's legal obligation to act in the best interests of their clients. Specifically, the agent is responsible for collecting premiums from clients and ensuring that they are properly forwarded to the insurance company in a timely manner. Failure to do so could result in legal action or license suspension. Option is incorrect because an agent must prioritize the client's interests over their own financial benefit. Option C is incorrect as agents must disclose any commissions or other compensations they receive from the insurance company to the client. Option D is incorrect because agents are legally required to act in the client's best interests when recommending policies. Question 6. Mr. Allen has a term life insurance policy that provides coverage for 10 years. At the end of this period, Mr. Allen decides to cancel the policy. Which of the following is true regarding the cancellation of the term life insurance policy? A. Mr. Allen will receive a refund of premiums paid if the policy is cancelled after 10 years. B. Mr. Allen will lose all premiums paid if the policy is cancelled at the end of the term. C. Mr. Allen can convert the policy into a whole life policy without additional underwriting. D. Mr. Allen is entitled to receive the cash value of the policy if cancelled at the end of the term. Answer B. Mr. Allen will lose all premiums paid if the policy is cancelled at the end of the term. Explanation. Term life insurance provides coverage for a specific period and it does not accumulate cash value. If the policyholder cancels the policy after the term ends, they do not receive any refund of premiums. The premiums paid cover only the insurance coverage during the term and no money is refunded upon cancellation. Option is incorrect because term life policies do not offer a return of premiums after the policy term ends. Option C is incorrect because term policies do not automatically convert to whole life policies. Conversion rights are typically available only during specific periods within the policy term. Option D is incorrect because term policies do not have a cash value to be refunded or cashed out. Question 7. Which of the following factors is not typically used in determining the premium for a homeowner's insurance policy? A. The location of the property and the local risks of natural disasters. B. The personal driving history of the homeowner. C. The value of the property and the amount of coverage selected. D. The credit history of the homeowner in some cases. Answer B. The personal driving history of the homeowner. Explanation. Homeowners insurance premiums are based on several factors including the location of the property, to assess risks like natural disasters, the value of the property which determines the amount of coverage needed, and sometimes the homeowner's credit history. However, the personal driving history of the homeowner is not typically a factor in determining homeowners insurance premiums. Option is incorrect because the location of the property does impact the premium due to the associated risks. Option C is incorrect because the value of the property and coverage amounts are directly related to premium calculation. Option D is incorrect because an individual's credit history may be considered in some cases as it helps assess the likelihood of claims being filed. Question 8. Which of the following statements about health insurance under the Affordable Care Act is true? A. Insurers can deny coverage based on pre-existing conditions. B. Health insurance policies must include coverage for essential health benefits. C. Only individuals with high-risk medical conditions are eligible for ACA health insurance coverage. D. ACA-compliant policies do not provide coverage for preventive care services. Answer: B. Health insurance policies must include coverage for essential health benefits. Explanation: under the Affordable Care Act, ACA, all health insurance policies sold in the marketplace must cover essential health benefits such as emergency services, hospitalization, maternity care, mental health services, and preventive care. This requirement ensures that consumers have access to comprehensive care regardless of their medical history. Option is incorrect because the ACA prohibits insurers from denying coverage based on pre-existing conditions. Option C is incorrect because the ACA does not limit eligibility to only those with high-risk medical conditions. It provides coverage to everyone. Option D is incorrect because ACA-compliant policies must provide coverage for preventive care services without charging additional cost sharing. Question 9. What is the primary purpose of the Texas Life and Health Insurance Guarantee Association? A. To provide insurance coverage for individuals who are unable to pay their premiums. B. To ensure that insurance companies do not overcharge for policies. C. To provide protection to policyholders in the event that their insurer becomes insolvent. D. To manage disputes between policyholders and insurance companies. Answer: C. To provide protection to policyholders in the event that their insurer becomes insolvent. Explanation: the Texas Life and Health Insurance Guarantee Association is designed to protect policyholders if their insurance company becomes financially insolvent. The association provides a safety net by covering claims made by individuals who hold life or health insurance policies, ensuring that policyholders are not left without coverage due to the failure of their insurer. Option is incorrect because the association does not provide coverage for individuals unable to pay premiums. Option B is incorrect because the association does not regulate pricing. It protects policyholders in the event of insolvency. Option D is incorrect because the association does not handle disputes. It provides financial protection in case of insurer insolvency. Question 10. Which of the following is an example of an exclusion in a property insurance policy? A. Coverage for damages caused by fire. B. Coverage for damages caused by earthquakes in certain regions. C. Coverage for personal property located inside the home. D. Coverage for damages caused by theft. Answer: B. Coverage for damages caused by earthquakes in certain regions. Explanation: exclusions in insurance policies are specific situations or risks that are not covered under the policy. In property insurance, earthquake damage is commonly excluded unless the policy specifically includes it, often requiring an additional endorsement or separate policy. Option is incorrect because fire damage is typically covered under a property insurance policy. Option C is incorrect because personal property inside the home is generally covered unless specifically excluded. Option D is incorrect because theft is typically covered under a standard property insurance policy. Question 11. Which of the following statements best describes the role of an insurance broker in the Texas insurance market? A. An insurance broker represents an individual insurer and sells only their policies. B. An insurance broker is responsible for the underwriting of insurance policies. C. An insurance broker helps clients find and purchase insurance from a variety of insurers. D. An insurance broker is employed by the insurance company to handle claims. Answer: C. An insurance broker helps clients find and purchase insurance from a variety of insurers. Explanation: an insurance broker acts as an intermediary between the client and multiple insurers. They are not tied to a specific insurance company and can offer policies from a variety of insurers, helping the client choose the best coverage for their needs. Brokers are not involved in underwriting or claims processing. Option is incorrect because an agent represents a specific insurer, not a broker. Option B is incorrect because brokers do not underwrite policies. This is the responsibility of the insurance company. Option D is incorrect because handling claims is the role of the insurer, not the broker. These questions focus on core concepts of insurance, including policy features, ethical responsibilities, regulatory aspects, and Texas-specific insurance laws. Question 12. Which of the following is a key characteristic of an all-risk insurance policy? A. It covers only specific risks that are listed in the policy. B. It covers all risks except for those specifically excluded in the policy. C. It provides coverage only for accidental damage. D. It only covers natural disasters such as floods and earthquakes. Answer B. It covers all risks except for those specifically excluded in the policy. Explanation: an all risk or open peril policy provides coverage for a wide range of risks, including those not explicitly listed in the policy except for certain exclusions. The exclusions are typically listed in the policy and all other risks are covered. Option is incorrect because policies that cover only specific risks are called named peril policies. Option C is incorrect because the all-risk policies cover a broader range of risks, not just accidental damage. Option D is incorrect because natural disasters may be excluded under an all-risk policy unless specifically included. Question 13. Which of the following is an example of moral hazard in insurance? A homeowner neglecting to install a smoke detector in their home. B. A person deliberately starting a fire to collect insurance money. C. A driver increasing their auto insurance coverage after an accident. D. A business installing security measures to prevent theft. Answer B. A person deliberately starting a fire to collect insurance money. Explanation: moral hazard refers to a situation where an individual may take on greater risks or act dishonestly because they know they are protected by insurance. In this case, deliberately starting a fire to collect the insurance payout is an example of moral hazard. Option is incorrect because neglecting to install a smoke detector is an example of negligence, not moral hazard. Option C is incorrect because increasing coverage after an accident is a form of adjusting insurance, not moral hazard. Option D is incorrect because installing security measures is a risk-reducing behavior, not an example of moral hazard. Question 14. Which of the following is true regarding the claim settlement process in an insurance policy? A. Insurance companies are required to settle all claims immediately upon receiving them. B. The insurer must deny a claim if it is not filed within the time frame specified in the policy. C. Insurers can refuse to settle claims if they are not properly documented. D. Claim settlement is not affected by the terms and conditions of the policy. Answer C. Insurers can refuse to settle claims if they are not properly documented. Explanation: the claim settlement process requires that the insurer provide adequate documentation to support their claim. Failure to provide sufficient documentation or evidence may result in the insurer refusing to settle the claim. Option is incorrect because insurers may take time to process claims and verify the details. Option B is incorrect because the insurer may deny claims if not filed within the policy's time frame, but this depends on the specific policy terms. Option D is incorrect because the terms and conditions of the policy directly affect the settlement of claims. Question 15. Which of the following types of insurance would provide coverage for a business's loss of income due to natural disaster? A. Property insurance. B. Business interruption insurance. C. General liability insurance. D. Workers' compensation insurance. Answer B. Business interruption insurance. Explanation: business interruption insurance covers the loss of income that a business suffers due to an event that disrupts its operations, such as a natural disaster. This type of insurance typically covers the ongoing expenses and lost revenue during the period of interruption. Option is incorrect because property insurance covers damage to physical property but not loss of income. Option C is incorrect because general liability insurance covers legal and bodily injury claims, not income loss. Option D is incorrect because workers' compensation insurance covers injuries to employees, not loss of income. Question 16. What is the principle of indemnity in insurance? A. The policyholder should be compensated for more than the actual value of the loss. B. The insurer must restore the policyholder to the same financial position as before the loss. C. The policyholder can choose to replace damaged property with a higher value item. D. The insurer must offer compensation for emotional distress caused by the loss. Answer B. The insurer must restore the policyholder to the same financial position as before the loss. Explanation: the principle of indemnity ensures that insurance policies restore the policyholder to the same financial position as they were before the loss without providing any financial gain. The compensation should be equal to the actual value of the loss, not more. Option is incorrect because the principle of indemnity does not allow for compensation that exceeds the actual loss. Option C is incorrect because the policyholder cannot choose to replace property with a higher value item. Option D is incorrect because indemnity typically does not cover emotional distress. It is focused on financial losses. Question 17. Which of the following is an example of an occurrence in liability insurance? A. An employee being injured at work due to an unsafe condition. B. An insured business being sued for breach of contract. C. A product defect causing harm to a consumer. D. A motor vehicle accident caused by the insured's negligence. Answer D. A motor vehicle accident caused by the insured's negligence. Explanation: an occurrence in liability insurance refers to an event that results in injury, damage, or loss and leads to a claim against the insured. A motor vehicle accident caused by negligence is an example of an occurrence under auto liability coverage. Option is incorrect because employee injuries at work are typically covered under workers' compensation, not liability insurance. Option B is incorrect because a breach of contract is not considered an occurrence. It falls under business liability for contractual disputes. Option C is incorrect because product defects may be covered under product liability, but it is not generally categorized as an occurrence in liability insurance. Question 18. Which of the following is typically covered under a standard homeowners insurance policy? A. Losses caused by earthquakes or floods. B. Damage caused by tenant or guest's negligence. C. Damage to property resulting from normal wear and tear. D. Injuries to guests while they are in the homeowner's pool. Answer D. Injuries to a guest while they are in the homeowner's pool. Explanation: homeowners insurance typically includes liability coverage, which can cover injuries to guests while on the property, including those that occur in pool. However, damages from natural disasters such as earthquakes or floods typically require additional coverage. Option is incorrect because damage from earthquakes or floods is usually excluded under standard homeowners policy. Option B is incorrect because damage caused by tenant's negligence might be covered under renter's policy, not homeowner's policy. Option C is incorrect because normal wear and tear is not covered under homeowner's insurance. It only covers accidental damage. Question 19. Which of the following types of insurance provides protection for the legal costs associated with defending a lawsuit? A. Liability insurance. B. Health insurance. C. Life insurance. D. Disability insurance. Answer A. Liability insurance. Explanation: liability insurance provides coverage for legal costs, including defense costs if the policyholder is sued for damages. This includes attorney fees, court costs, and any settlements related to the lawsuit. Option B is incorrect because health insurance provides coverage for medical expenses, not legal costs. Option C is incorrect because life insurance pays out a death benefit, not legal expenses. Option D is incorrect because disability insurance provides income protection if the insured is unable to work due to disability. Question 20. In the context of workers' compensation insurance, which of the following is true? A. Workers' compensation insurance covers injuries regardless of fault. B. Workers' compensation insurance is only required for companies with more than 100 employees. C. Workers' compensation insurance does not cover work-related mental health issues. D. Workers' compensation insurance covers injuries that occur outside of the workplace. Answer A. Workers' compensation insurance covers injuries regardless of fault. Explanation: workers' compensation insurance covers medical expenses and lost wages for employees who are injured on the job regardless of who is at fault. This system is designed to provide compensation to workers for job-related injuries while preventing them from suing their employer. Option B is incorrect because workers' compensation requirements vary by state, but it typically applies to employers with employees, not based on the number. Option C is incorrect because workers' compensation may cover certain work-related mental health issues depending on the state and circumstances. Option D is incorrect because workers' compensation covers injuries that occur in the course of employment, typically within the workplace or during work-related activities. Question 21. Which of the following is a key feature of umbrella insurance? A. It provides coverage only for specific types of risks. B. It covers damages beyond the limits of primary insurance policies. C. It is designed exclusively for property insurance. D. It is a mandatory policy for all drivers. Answer B. It covers damages beyond the limits of primary insurance policies. Explanation: umbrella insurance is designed to provide additional liability coverage beyond the limits of other existing policies, such as auto or homeowners insurance. It offers an extra layer of protection against major claims or lawsuits. Option is incorrect because umbrella insurance is not limited to specific types of risks but provides broader liability coverage. Option C is incorrect because umbrella insurance is primarily a liability policy, not a property insurance policy. Option D is incorrect because umbrella insurance is not mandatory, it is optional supplemental coverage. Question 22. Which of the following is not typically covered under a basic health insurance policy? A. Prescription medications. B. Routine checkups. C. Cosmetic surgery. D. Emergency medical services. Answer: C. Cosmetic surgery. Explanation: most basic health insurance policies do not cover elective or cosmetic surgeries unless they are deemed medically necessary. Routine checkups, prescription medications, and emergency medical services are typically covered. Option is incorrect because prescription medications are often covered under a health insurance policy, although specific drugs may have exclusions. Option B is incorrect because routine checkups, such as annual physical exams, are usually covered. Option D is incorrect because emergency medical services such as ambulance rides and hospital emergency visits are typically covered. Question 23. What is the main purpose of an insurance deductible? A. It determines the maximum amount the insurer will pay for a claim. B. It is the amount the insured must pay out of pocket before insurance coverage kicks in. C. It is the percentage of the claim paid by the insurer. D. It reduces the insurance premium by increasing the coverage. Answer: B. It is the amount the insured must pay out of pocket before insurance coverage kicks in. Explanation: a deductible is the amount of money that the policyholder must pay out of pocket before the insurance company will cover the remaining cost of the claim. The higher the deductible, the lower the premium, but the insured pays more upfront. Option is incorrect because the deductible is not the maximum payout. It is the amount the insured pays before the insurer pays. Option C is incorrect because the deductible is a fixed amount, not a percentage of the claim. Option D is incorrect because the deductible lowers the premium by shifting more risk to the insured, not by increasing the coverage. Question 24. What does underwriting refer to in the insurance industry? A. The process of selling insurance policies to customers. B. The process of determining the risk of insuring a potential policyholder. C. The process of collecting premiums from policyholders. D. The process of paying out claims to policyholders. Answer: B. The process of determining the risk of insuring a potential policyholder. Explanation: underwriting is the process used by insurers to evaluate the risk of insuring a person, property, or entity. It involves assessing factors such as health, age, occupation, and past claims to determine whether the insurer should accept or deny the application. Option is incorrect because selling policies is a part of distribution, not underwriting. Option C is incorrect because collecting premiums is part of the business operations but not underwriting. Option D is incorrect because paying out claims is the responsibility of claims management, not underwriting. Question 25. Which of the following is the primary purpose of auto liability insurance? A. To cover medical expenses for the driver. B. To provide protection against damages caused to another party in an accident. C. To pay for vehicle repairs after an accident. D. To cover the cost of car theft. Answer: B. To provide protection against damages caused to another party in an accident. Explanation: auto liability insurance covers damages or injuries that the policyholder causes to others in an accident. This includes both property damage and bodily injury to other parties involved in the crash. Option is incorrect because medical expenses for the driver are usually covered under personal injury protection, PIP, or health insurance. Option C is incorrect because vehicle repairs would typically be covered under collision coverage or comprehensive coverage, not liability insurance. Option D is incorrect because theft coverage is typically covered under comprehensive auto insurance. Question 26. Which of the following is true about life insurance premiums? A. Premiums for term life insurance typically remain the same for the life of the policy. B. Premiums for whole life insurance increase each year. C. Premiums for term life insurance can change based on the policyholder's age. D. Premiums for universal life insurance cannot be adjusted. Answer: C. Premiums for term life insurance can change based on the policyholder's age. Explanation: term life insurance premiums may increase upon renewal, particularly after a certain period or when the policyholder reaches a certain age. Whole life insurance, on the other hand, generally has fixed premiums, while universal life insurance premiums can be adjusted. Option is incorrect because term life insurance premiums may change upon renewal or based on the age of the policyholder. Option B is incorrect because premiums for whole life insurance are typically fixed and do not increase annually. Option D is incorrect because universal life insurance allows for flexible premium payments. Question 27. Which of the following is a named peril insurance policy? A. A homeowner's policy that only covers fire, theft, and vandalism. B. Policy that covers all risks except for those specifically excluded. C. Car insurance policy that covers all types of damage to the car. D. Policy that covers any risk unless specifically stated. Answer A. A homeowner's policy that only covers fire, theft, and vandalism. Explanation. Named peril insurance policy covers only those risks that are specifically listed in the policy, such as fire, theft, or vandalism. If peril is not named, it is not covered. Option B is incorrect because this describes an all-risk or open peril policy, not named peril policy. Option C is incorrect because policy that covers all types of damage would likely be an all-risk or comprehensive policy. Option D is incorrect because this is also an all-risk or open peril policy. Question 20. Which of the following is an example of subrogation in insurance? A. An insurance company paying out a claim to the policyholder for a covered loss. B. The policyholder seeking compensation from the third party responsible for the damage. C. An insurer selling a policy to a new client. D. The insured choosing to repair their property instead of filing a claim. Answer B. The policyholder seeking compensation from a third party responsible for the damage. Explanation. Subrogation is the process by which an insurer, after paying a claim to the insured, seeks compensation from a third party that caused the loss. It allows the insurer to recover some or all of the payment. Option is incorrect because paying out the claim to the policyholder is not subrogation but part of the claims process. Option C is incorrect because selling a policy is part of the underwriting or sales process, not subrogation. Option D is incorrect because the insured choosing to repair property instead of filing a claim is not subrogation. Question 29. Which of the following types of insurance would provide coverage for a business's liability if a customer is injured while on the premises? A. Commercial property insurance. B. General liability insurance. C. Workers' compensation insurance. D. Business interruption insurance. Answer B. General liability insurance. Explanation. General liability insurance covers a business's legal responsibility for bodily injury, property damage, and other risks that may arise on its premises. This includes injuries to customers while on the property. Option is incorrect because commercial property insurance covers damage to property, not bodily injury claims. Option C is incorrect because workers' compensation insurance covers injuries to employees, not customers. Option D is incorrect because business interruption insurance covers loss of income, not liability claims. Question 30. Which of the following is a typical feature of long-term care insurance? A. It provides coverage for short-term hospital stays. B. It covers care for chronic illnesses or disabilities that limit daily living activities. C. It covers funeral expenses. D. It provides coverage for health emergencies only. Answer B. It covers care for chronic illnesses or disabilities that limit daily living activities. Explanation. Long-term care insurance is designed to cover care expenses for individuals who are unable to perform activities of daily living due to chronic illness, disability, or aging. It typically covers nursing home care, in-home care, and other types of long-term assistance. Option is incorrect because long-term care insurance is not for short-term stays. It is for extended care. Option C is incorrect because funeral expenses are covered by life insurance, not long-term care insurance. Option D is incorrect because long-term care insurance is not limited to emergencies but to chronic care needs.